In this video, I want to talk about the 7 things that underwriters look for when it comes to your small business loan application. I'm Dominique. I'm a business funding specialist, CEO and founder of Domino Effects Group, BFX, and the Domino Effect, this channel. I'm a business financing expert, business credit expert, and I help you get approved for funding. I've been in the finance space for many, many, many years, and I've underwritten hundreds of applications, okay? Everything from startups to multi-million-dollar companies. And I see a lot of the same mistakes being made. And I want to help you guys overcome some of those challenges. Okay. I want to help you increase your approvals, get better rates, get better terms, and know that there are options out there. Stop believing all of the hype that you can't get funded because you're a woman, because you're a veteran, because you're Black, because you're Hispanic. Don't even listen to that. All right. There is a massive pool of private capital out there. We have access to it, but we want to make sure that you have the strategies and the knowledge of what it takes to qualify, because it's not enough to just want the money and walk in and say, I need it. Right. There are certain points and factors that lenders and credit issuers are looking at when it comes to your application. So in order to help you get more approvals, you need to know exactly what they're looking for. And that's exactly what we're talking about today. So do me a favor, hit that like button, hit that subscribe button, and watch this video till the end so I can continue to make more free courses and trainings just like this one. Now let's get into it. There's many core factors that lenders are looking at when it comes to your application, but today I'm just going into the core factors, the really basic fundamentals that you need to know when it comes to whatever they're looking at, right? When it comes to if you're trying to get SBA financing, if you're trying to get bank financing, right? That long-term financing with better repayment terms, with better interest rates. So the first thing that they're going to be looking at is your credit. And I know that this might sound obvious, and I know you're probably like, oh man, I'm not credit. Here we go, right? Because we get that all a lot. All right. Oh no, credit. All right. I'm automatically out. But guys, listen, when it comes to your credit, we're really just trying to see a snapshot, trying to get a snapshot of your profile, what your financial characteristics are, your habits. Are you financially responsible? That's really what they're looking at. If you have a 600 credit score, we can work with that on certain types of financing, not for certain SBA financing or bank financing. You're going to need to get that up to a 680, but you can work your way up to it. So just because you may not hit it right now doesn't mean that you should stop. Doesn't mean that you just go, oh, well, I guess I'm out of the running because my credit doesn't qualify. No, you have to be changing your mindset along with this. Okay. You went out there, you took the effort to build the business. So it's going to make your life a lot easier, obviously, if you have better credit. But a lot of people have challenged credit, okay? Especially as a new business. And as small business lenders and underwriters and funders, they all understand that, new entrepreneurs sacrifice their credit when they're building their business, okay? So don't be embarrassed, don't be ashamed, and don't let that keep you out of the bank or keep you out of applying for the right resources, okay? But also you can keep in mind that you should be simultaneously cleaning this up. If you have challenge credit, you can combat that with business credit. Use business credit to build up your business, okay, for some of that initial startup capital with vendors. Get 15 to 2,500 in business credit as opposed to using that in your own money, right? Your own funding. And clean it up, right? As you're simultaneously using your business credit, as you're getting customers, as you're trying to generate revenue. So at the same time, you should be trying to fix your credit. You can fix your credit with things like the self-starter program. That's an installment program where you can pay like $35. You can select how much you want to pay, $25 or $35. And it's an installment loan. So it combats your credit. You pay that every month and it shows that you're making responsible payment history. Second is time in business. Lenders are looking at your time in business. Obviously, the longer it is, the more comfy, the more comfortable that they feel. So if it's 1 to 2 years, you're good. You can get by with that. And if it's 5, 6, 7, 10 years, 20 years, that's great. Okay, because that really puts you in a really nice territory. But that 1 to 2 years is really the bare minimum. There are short-term lenders out there that will work with you if you have 6 months time in business and you have some strong revenue. There are options available, but just because someone's been in business longer than you doesn't necessarily mean that they're going to get more funding than you or that they're going to get an approval, right, when you didn't, because lenders are looking at all of these things and everything is on a case-by-case basis. Number 3 is your cash flow. Lenders really want to see how you're managing the cash flow in your business. A lot of lenders, they want to see how much money you have, how much you're keeping in the bank. They want to see if you're having returns. They want to see how you're managing the money that's coming in to your business. Okay. And to be honest, if you're managing your cash flow and you're really good and you're just really crushing sales, then, and you have a shorter time in business and you've sacrificed your personal credit and you have a shorter time in business, you see what I'm doing there. Okay. If you have even though certain factors are not, just because all of the factors are not hitting, doesn't mean it takes you out of the race. Okay. If you're managing your cash flow really well, you're crushing it with sales, but you have a short time in business, okay, and you have a lower credit score because you sacrificed your credit. There are lenders that will favor the cash flow over your time, over your credit and your time in business. Okay. So keep looking at what options are available for you. Number 4 is profit. Okay. Yes, lenders want to see if you're profitable. If you're losing money, then the lender's going to be like, how am I supposed to get my money back? Right. So now if you're looking for anything that's under 250,000 or even 500,000, even sometimes greater, right? Lenders can look past if you have a year that wasn't profitable, especially if it was like during COVID, and all that. They're taking that into account. So you can be in good shape there, okay? But if you're not showing a profit, and there's still plenty of options out there for you. Like I said, you can establish business credit, you can still get equipment financing. You can get approved for a business loan, but obviously the more profit you have, the better, right? It is more secure for the lender. So you definitely want to make sure that you can show them that you're showing a profit or you have the potential to show a profit, right? Or the funding coming in is going to elevate you. You have an opportunity that's coming up and you need the funding to capitalize on this opportunity, which will elevate your business to a whole new level. And then you'll be able to start turning massive profits, something like that. Number 5 is your industry. So there's not a one size fits all when it comes to the industry. It's really, really, really important that you understand that, okay? That's why we have over 80 lenders on our platform here at DFX, because if we only work with one, then we wouldn't really have a lot of options for you. We wouldn't really have a lot of transactions, really, because, certain lenders love certain industries, and you want to make sure that you are applying with the right funder that favors your industry, what you are doing. And some lenders are just more skilled at underwriting with certain industries. Okay. Some really like contracting, really skilled at looking at medical underwriting. Some really love IT and tech. Some don't understand IT and tech at all. Some love manufacturing and then others don't. Some love e-commerce and others don't. Some really specialize in e-commerce and others don't. And the list goes on and on and on. So it's important that you are matching your application to the right lender. And this is a big mistake that a lot of new businesses and small business owners make, is they're just applying applying randomly. And also doing that can hurt your credit, right? You can rack up hard inquiries and all kinds of things. Number 6, guys, is use of funds. What does this mean? Well, what are you going to be using the money for when you get it? And lenders want to understand, okay? And it's not just, you can't just say some random flippant answer. They really want to understand what you're going to be doing with this money when you get it, okay? They love, if you can show that you're going to be using this money to grow and turn a profit, they love that. Why? Because it's going to help them grow as well. Okay. You have to stop looking at them as like your enemy, right? You can actually work together and really see some great opportunity. All right. So if you can show that you're using this financing and you're going to be using it for things that are going to drive more revenue and ultimately more profit, okay, that's great. So that can be marketing, that can be hiring, that can be buying inventory, it can be reselling more. Okay, maybe you're moving into a new area, you're expanding to a new location, maybe you're expanding to a higher income neighborhood, right? With more traffic, you're going to be adding additional products, you're going to be adding additional services, whatever that is. Maybe you're expanding from a physical location to an online market. Maybe you're expanding from the US to an international market. Okay. Whatever that is, what is it going to look like that's going to scale your business up to that level and then more than afford the financing that you took out? And last but not least is your ability to repay. Lenders are only going to give you the amount of money that you can afford to repay back at the time that you took out of the financing. Okay. So if you're at a place where you're not getting approved for as much money as you wanted, I recommend that you take whatever it is that you can get, because that's your starting point. Okay. That's your starting point, but you need to make sure that you have a plan to put it to work. Okay. Put it into things that are going to grow and scale your business. Don't just take it if you don't have a use for it. And also know this, if you get to the last point right before the funds are released and the lender's going to want to hear what you're going to want to use the funds for, if you can't answer that question and you go, no, I don't really know yet, I might take some time off. I'm thinking about, I might spend it here, but I don't really know yet. That's a huge red flag and it scares them off. And I've literally had the lender call me up and be like, yeah, no. Because when we talked to them, they didn't really have a real clear explanation of what they were going to use the funds for. So get in front of this, guys, because as your business grows and as your business scales, you can always go back and ask for more funding. You have to show and prove it. Okay. You have to prove that once you go back, they'll reevaluate your business, look at your sales, and then you apply and you ask for additional financing. Happens all the time. I hope you found this information helpful. Again, lenders look at these core fundamental things, but they also look at much, much more other factors. Okay. These are just the top 7 when it comes to evaluating your application that I want you guys to know, because it's a very important first step on what you need to focus on how you should maneuver moving forward. And it's very important to understand that lenders are always changing their guidelines and the way that they look at their business. For example, when we talk about SBA financing, and we talk about bank financing, some of our lenders have already reached out and said there are certain NIAX codes that they are not working with due to fraud that happened when they were issuing the PPP and EIDL loans. So, and these were NIAX codes that were a go, right? So, and then if you're a member in the club, we give away all those NIAX codes as well. But these are just a few things that you need to know about. They are changing their regulations constantly, which is one of the benefits of working with a platform with DFX. It's exactly why DFX was founded, because we have over 80 lenders on the platforms with sources that are beyond reach for most. You can apply in one simple place and get matched to the right funder. So let's take a step back really quick here, guys. Okay. Everything I said to you is possible, but none of it matters if you don't establish your credibility, if you don't establish your foundation. If you're stalling the process and you're just like, well, I don't really want to do it right now, I'll wait. Okay, ask yourself, what are you waiting for? How much time do you need to keep spending online, keep getting denied? All right. And let me tell you, the more times that you apply online and you don't know what the lenders are looking for, you're risking dings on your personal credit, all of these hard inquiries, you're risking a really high interest loan, you're risking taking the loan with no exit strategy. And so get smart about this, guys. If you're not using business credit to offset some of your expenses, you're eventually going to hit a wall. If you're using your Social Security to get vehicle financing, you're eventually going to hit a wall. So we have an excellent step-by-step process that walks you through getting business credit and funding without having to do all this, without having to waste hours online, without having to waste money, without having to waste time trying to find the answers on how to find the right path to get funding for your business. And the best part is, once you figure this out, you can duplicate it. That's the best part. You can duplicate it. So definitely take advantage of this, because we spend a ton of time getting the right information for you. If you're a woman-owned business, veteran-owned business, new entrepreneur, or small business, then make sure that you're coming here every week for our free courses and trainings that help you figure out how to get money to grow your business. So that's it for today, guys. If you follow these steps, then you're on your way to establishing a credible foundation that makes you attractive to credit issuers, lenders, and underwriters. Now, I want you guys to do 2 things. First, I want you to claim your free step-by-step building business credit guide. You can download that at plan.dominoeffectsgroup.com. Gives you all the tools that you need to get started. And the second thing I need you to do is speak with our advisor. Okay, you can call 888-488-4145. You can also text that number, send your questions to that number. We love talking with you, we love engaging with you, but schedule your one-on-one. All right, so you can go to plan.dominoeffectsgroup.com. So that was the link that I said for the guide, but I'll put the link to the guide below, because plan.dominoeffectsgroup.com is where you want to schedule to speak to one of our advisors. And guys, this is all it takes. Okay, schedule your free funding planning session. Figure out what you qualify for right now. If you don't qualify, then figure out what the steps are to get you there. All right, get some guidance. Okay, thanks guys for watching. I hope you learned a lot from this free course. Do me a favor, because you know that YouTube algorithm, go ahead and hit that like button, that subscribe button, and share with other peers in your small business community that could use some help with getting funding to grow their companies. Now make sure you hit that like button, that subscribe channel, so I can continue to make more free courses and trainings just like this one. See you next time. Credit, guys. It is a great step-by-step guide to help you get started. You can download that guide right there at the bottom with the link in the description. And the second thing that I need you to do is and you can always join our club for live Q&As and to access live events, monthly masterclasses, courses, and trainings just like this one. See you next time. DFX as a resource to help guide you through this. You are